Hi, I'm Jerry Bowyer. Welcome to Meeting of Minds podcast. My guest today is Todd Russ, Treasurer of the state of Oklahoma. Treasurer Russ, thanks for being with us today.
Yes, thank you.
Well, I'm really fascinated by what I've been seeing in the news. The legislature that you're responsive to, you carry out the laws which are passed by the legislature of the state. The legislature has taken a position which seems very reasonable to me, which is when the state is deciding with whom to do business, say especially in finances, you do not want to be doing business or material amounts of business, for instance, with your pension plan management, with companies that are attacking the energy industry, since the energy industry is maybe the main economic driver of your state. So first of all, do I have that right so far?
Yep, absolutely.
All right.
Fantastic.
So your implementation of that is to look at companies that have made strong public statements against energy, against fossil fuels, which is, the only really practical energy right now to run the world economy. And you've put out that list to them, you've written to them, and you've given them an opportunity to respond by either proving that they're not not just claiming, proving that they're not boycotting energy, or they're giving up the right to do business with the state. Can you tell us more about that?
Yeah, it's not completely original for the state of Oklahoma. There's been several other states that have kind of took the lead on this. We've definitely joined in, and we're glad to. And being an energy state, oil and natural gas, and even some coal, that's very important to us. But really, it should be important to people all across the United States and the world if they want to stay warm in the winter and all the things that have to do with survival, then they should be concerned. Basically, the process, we submitted about 160 some letters to banks and financial companies that did business with the state of Oklahoma in some form. And we got almost all of those back, which really surprised me. There were a few that didn't respond. They thought it didn't apply to them. They thought they didn't qualify in the language of the statute, although the language in the statute said that if you don't respond, it's presumed that you are boycotting, and therefore you will automatically be placed on the list. And I don't think they read that part, so I had to put them on the list, and they really did come around. But for the rest of them, they responded to a pretty comprehensive questionnaire that I'd assembled, and the letter, the language in the law actually allows a considerable amount of latitude for the treasurer to go in and actually do their own investigation, use third-party consultants, and whatever we felt was reasonable and necessary to get truth. And interestingly, most of those banks responded that no, we don't boycott oil and gas and energy, and it's kind of paraphrasing, we don't know what you're talking about. So we really had to go in and do a little more digging and do our own research to find out what these institutions' honest position was in a more broad, comprehensive standing across the U.S. and the world. That's where it got complicated for them, because when you go into these net zero alliances and some of the climate accords, that all changes because of the comments and stuff that they place on those websites, and that become very complicated for them, and that had a lot to do with my final decision.
Well, it's interesting. I've seen the claims from some of these folks that they don't boycott energy, don't boycott fossil fuels. But of course, there is directly boycotting all fossil fuels on the one hand, which hardly anybody does. I mean, you'd be crazy to have, say, a broad-based fund that didn't have any oil or gas companies in it. What I see, and we're in the middle of annual meeting season right now, is over and over again, these asset managers pressuring companies to decarbonize, to adopt aggressive phase outs for fossil fuels, to write down the assets of the fossil fuels, to admit the sins of being a fossil fuel company to eventually divest, to divest from thermal coal, et cetera. So, yeah, I mean, that's a pretty incredible bar, for them to, to say, well, we don't completely boycott fossil fuels. Well, of course, no large asset manager could completely boycott fossil fuels. But day after day after day, they're pushing decarbonization, which is bad for fossil fuels. Therefore, it's bad for really all of us. But especially bad for states like Oklahoma that are energy states. So they seem to be responding to a kind of a straw man when they say, well, we don't boycott fossil fuels and we don't know what you're talking about.
Absolutely, absolutely, and that's kind of what I found out when we started going through the evaluations and reading the responses. And you're exactly right. They don't, certainly don't completely boycott energy, because every one of them have come to me and said, look, we hold billions of dollars in investments in oil and gas companies, energy companies, and fortunately, I had a little bit of help doing my homework. And when I asked them what percent of your portfolio does that make up, they weren't real happy to answer that was down to like 2 or 3, maybe 4% of their total portfolio, which was pretty embarrassing when you put it in those terms. And that seems to speak, pretty clearly to the conversation about not boycotting, especially if you can benchmark their trends and see where some of them have actually backed off from 20-25% to 2 to 3 to 4%. And then you get into their statements and their climate accord memberships, and some of these are signatory members that were like charter members, and see kind of their statements that are pretty much pounding the desk saying we will pressure companies to move out of these industries, and they will meet our timelines or else. And
we have to force behavior, as Larry Fink from Blackrock said. Sometimes you just have to force behavior.
Exactly. That's what really, I told one of them, I said, look, for years, you guys were in your lane and we were in our lane. You didn't like us, but we stayed in our lane and we got on down the road. Now you started kind of moving over the center line and moving into my lane, and I honked and tooted my horn a little bit, but that didn't do any good. Now you're trying to run me plumb off of the road into the ditch and destroy me. And I take that real serious and personal in an energy state like Oklahoma, and anyone else really should. And we have something to say about that. We're not gonna let you run us off into the ditch and wreck us.
You don't work for BlackRock. You don't work for Vanguard. You work for the people of Oklahoma.
Absolutely.
Right.
And it's our money.
And you can fire somebody. It's really weird to see some of the pushback from the ESG industry to this, as if, there's somehow you're obligated to keep BlackRock forever. And I'm seeing some of this kind of quasi-analysis coming out from the pension board, saying that it would cost a certain amount of money to the pension plan if you fired BlackRock, because there's direct cost of trading, right? If you sell something and you buy something else, well, that's not free. It's pretty cheap actually, but it's not free. I mean, it's $9.7 million in a $7 billion pension plan. And that's like an initial switch, and so that gets amortized over time. But
Absolutely.
the logic of their argument is you can never fire anybody because
Absolutely.
anytime you ever fire an asset manager, of course, you're going to incur some brokerage fees. So you have to keep the same asset managers forever and ever. Otherwise, it violates fiduciary responsibility. That's a really odd argument for them to be making.
You're exactly right. And that is exactly their position. And that's the first thing they came out with. We had board meetings last week with one of the big pensions. And I mean, they just pretty much just said, look, here's a place that we've estimated a certain amount of a loss. And, we're just, so here you go. We estimate a loss. And so therefore we don't have to comply anymore. Well, it's a lot more complicated than that, but that's kind of was their position. We'll follow up with that later. But I mean, I get it. They don't want to have to go through this. They've been doing the same old thing for years. And I pointed that out to to this particular fund manager that, you told me yourself you haven't repriced this in over 4 years. So obviously your estimates are based on old outdated data. You really won't know for sure until you go out and reprice it in the marketplace. I mean, I as a business person can clearly see the opportunity to buy down a 8, 9, 10 million dollar cost over a 5-year contract on a $7 billion holding. I got to think any good money manager with a little business savvy could more than make up those kinds of costs and be real happy to handle that $6, $7 billion.
Yeah, and especially when we add the fact that, as you said, you're not alone in doing this, right? There are other states that are doing this, and they're
Sure.
big. Texas. Last time I looked, it was a pretty big state. A lot of money there. Florida. So there's a real market opportunity for a major player to come in who would have very low fees, just like a Blackrock or Vanguard, and just come in and specialize in dealing with states that require no boycott of fossil fuels
Right.
as part of the cost of doing business. So they can arbitrage away that I calculated it was 0.0014 of your asset base was this cost, alleged
Yeah.
cost, and that cost, as you say, is non-dynamic. There's no competitive market there. So that's assuming nobody responds to this, or none of your 13 say, okay, you're right, we're going to change, and then they come in. So that seems to be a stretch. I think the other thing they sort of left out is, given the performance of energy recently, where energy prices have been rising, that funds that underweight energy have underperformed because last year energy was the best performing sector. So in essence, what they're saying is, well, here's your brokerage fees are going to go up 0.0014 if you fire BlackRock, and hire somebody else, but they're not counting the benefit of having asset managers who can fully participate in the market and do well in times when energy prices are rising. That's less constrained. Over time, non-ESG managers beat ESG managers.
Right.
So there's a performance, differential there that's bigger than the tiny brokerage fees incurred by firing an ESG manager. And they're not counting that at all in their study, as far as I can tell.
And they don't want to. They don't want to have that conversation. I mean, part of my guidance to them was, look, you've got to demonstrate some good faith effort to take a second look at this and reprice it. You at least have to present an RFP back to the market and see how that turns out. You can't just say, I assume I'd lose money, so therefore we're exempt and thank you, goodbye. I mean, it's just not that. It's just not that simple, and shouldn't be when you're dealing with billions of dollars of people's money, and they have a fiduciary obligation to check and see. They don't think so sometimes, but I think we'll convince them of that obligation.
Yeah, and it's also a kind of an odd thing for them to say, well, by limiting the number of businesses that you can do business with, you're harming the competitive market. But you're not allowed to turn around and say that to the asset managers. By limiting the amount of business that you'll do with fossil fuels, you can't say that's harming business.
Exactly.
You being selective is bad, but them being selective is good. Seems very kind of seems like it's just protecting an incumbent. It seems like it's just protecting the largest asset manager in the world, which spreads around a lot of money. I mean, that's what it really feels like. So that's them. Okay. So what are you hearing from the people? Because you were not elected by BlackRock. You weren't elected by the pension board. You weren't elected by the civil servants. You were elected by the people of Oklahoma, and you travel around and you speak to them. What are you hearing from them?
Well, that's interesting, and unfortunately, there's a lot of the public that's not familiar with ESG. Mostly your grassroots people in conservative states that have caught on to that. But it's interesting. I'll tell you kind of a litmus test that I picked up on about a week ago. It's interesting that one of the state banking organizations, we only have two, one of the state banking organizations either picked up a new member or renewed the membership of Bank of America and maybe a couple of the others that I generally never hear anything from until now. And so they came to their rescue and come up with this article that they put out that said, maybe the government's not here to help you. This may be costing taxpayers lots of money to step aside from ESG. Had this big article about it in the kind of what had been the statewide newspaper in Oklahoma. And I was real disappointed to see it because it really cast a different light on our state, our states that are our banks that are located here in Oklahoma. So later on, I had my staff print that story, and with that, it printed out all the comments online that people were responding back. It was interesting that there were several responses that blasted this banking association for pandering to some out-of-state international bank and was not really seeing it from a state bank perspective, a community bank perspective, and that they seem to be very aware of their role, the Bank of America's role in ESG and what was going on. And probably every one of those comments, except for maybe one, and that one was more diplomatic, but not like it really had a hard position supporting ESG. They really let this banking association leader have it, and that was really surprising to me because I didn't expect any comments one way or the other. So I think that if you take that and you multiply that across the state of Oklahoma, and people like that are aware of it, that tells me that they're catching on pretty quick and that they're keenly aware of what the motives of ESG mean to Oklahomans and the energy industry that brought us. And as our governor says, we're for all of the above. We're not anti alternative fuels. We believe that dancing with the one that brought us is also respectful and important, and that means that energy, oil and gas, and energy, hydrocarbon energies are going to be here to save us for a long time. And this is a national security issue as well as a humanitarian issue worldwide. When you look at what's happened in Ukraine and people in Europe that are probably chopping up furniture to get through the winter, burning wood, trying to find ways to come up with alternative energy because they've shut their natural gas lines off and their oil lines off. Go tell those people that you think they need to be scoring well on ESG and see what they say. So, I think we've had a pretty candid understanding of the motives and what it really means to the average person in America, and especially in Oklahoma.
Well, I mean, here's the thing. If this wasn't in some ways problematic, this ESG approach and this climate change agenda, then why did the world's second largest asset manager, Vanguard, drop out of the Climate Alliance? And release a report at the same time. It's interesting. The report said ESG does not add to performance. Okay, that's great. I read the report. The actual report said that for the data they looked at, ESG subtracted from performance. So they were being generous, when they said it doesn't help. The data they looked at, it hurts. All you have to do is, if the data is up to date, ESG gets killed in 2022 because of the global energy crisis and because of the war. So it's, how can it be fiduciary to leave out an asset class like that? Because you're going to have years you're going to have years where that happens. So the other thing I'm noticing is this year, these proposals are really getting voted down by investors at annual meetings. And they're getting voted down by wider margins than I've ever seen. I've sat through a lot of these annual meetings, and it's 2-year trend downward in terms of the vote support from investors. So investors know something about this, and they're starting, and they
Yeah.
figured this out. So I mean, and even the
Yeah.
Financial Times and Wall Street Journal have written about this too. This isn't just my observation.
Now, that's a great point, but I will tell you my concern is the power of the proxy. It's kind of like the Wizard of Oz, and we don't realize how important what's going on behind the curtain is to these industries and what we're talking about. Because at the end of the day, the proxy activity probably is the most lethal, dangerous part of this conversation, because they are actively trying to manipulate the power and authority of the management and take control of that, in spite of in spite of, and many times in spite of the management's objectives. I mean, let's face it. You'd hope that most managers are more interested in the bottom line and giving a good return on investment to their investors than they are listening to some activist role. And they're trying to remove them or reshape their boards through these proxies, and that is the most it's most obscure and less known, and very lethal.
Yeah, it is. I'm seeing the energy companies are now waking up to they thought they could appease these groups, and they're learning that they can't. So at the latest Exxon and Chevron meeting I sat in on, I was surprised by how forcefully the CEOs rebutted these proposals and these activists and strongly reaffirmed their commitment to using fossil fuels. I think they're a little fed up. So we're all learning,
Yeah.
we're catching up. And for those who are opposing what you're doing, I don't think they've caught up with the shift in public opinion and in investor knowledge. So you're to be commended for not just for looking out for the interest of the energy industry in your state. That's one of your duties as an elected official. Just to promote the Oklahoma economy, but also it's not at the expense of fiduciary. To me,
Right.
you are
Sure.
increasing your fiduciary role by insisting that you do business with companies that are willing to invest in energy and vote. I'm glad you brought up proxies and vote pro energy, because
Yes.
if they invest in companies but vote anti energy, they're
Mm.
still hurting energy.
Oh, absolutely. And that's what's been going on. They've been investing in a lot of energy companies, and it's amazing to me. I won't mention any names, but I had some prominent energy companies that basically said, "Look, we don't have a problem with one of these big names we've been talking about. Matter of fact, they invest in us regularly and support us." And in the back of my mind, I mean, my eyes were just rolling back, thinking, "Oh my gosh, they think that that's a passive, positive uh, uh, position, that they're uh, very supportive of their industry and like what they're doing." It's like, yeah, ask Exxon how that worked out for them, and they don't seem to realize that if they're investing in them, there's a nefarious uh, possibility that they may be trying to bulk up their proxy position to move a couple of board seats out from under them. And it's interesting how many things are going on out there that get overlooked. I'm very excited to hear Exxon finally waking up and actually uh, putting the boots and gloves on and taking on these people that have really set course for them to be out of business by 2050. I mean, the largest energy company in the world, and uh, basically being written off, 5 years at a time.
Yeah, yeah. I was really, and they really called out some of the activists. I was just loving it, cheering from the sidelines. Hey, think about this proxy voting thing. So you take assets of people who live in Oklahoma, retirees or future retirees, and they get 3 basis point management from Blackrock, but they lose their vote. And then you come along and say, look, maybe we need to take back our vote or put our money with somebody who will vote in favor of our interests. Oh no, it's going to cost 0.0014, one time to do that. It's like, well, how much would you? I wouldn't be willing to pay. I wouldn't be willing to sell my voting as a citizen. I would not. If someone came along and said, I'll pay you money to let me vote for you, right? Just I want to buy your vote, Jerry. I'll just vote however I'm going to vote what I think is in your interest, and I'll pay you money for that. I wouldn't take that deal. I would want to vote my own interest. Even if they wanted to charge me a nickel or a dime or whatever, or a dollar or whatever to vote, I would pay that to get my vote back. And it seems to me that the citizens of these states, even if all these analyses are right, and I think they're over exaggerated the cost, but even if you're paying that 0.0014 to get your vote back and vote your interest, that seems to me that's well worth it.
Sure.
As opposed to giving your authority away to people from New York who do not share your values, do not share your economic interests.
Yeah, but that's because you're looking into the long game, and they're looking at their short game with their friends and partners that they've been doing business with, not the taxpayers, investors, and the people that you should be concerned about the long-term benefits. And that's kind of unfortunate that's where that comes from. It's really amusing when I think back, when the bank failures that we saw, BBS Bank failed, and we started asking, look, do we have any exposure? And no, we don't hold any stock in BBS. But then we got to looking at our Russell 1000 indexes and our Russell 2000 and 3000s. They said, oh, you know what? They did report back that there was some holdings in one of those index funds, but it was really minimal. It was like 0.0017%. I said, so what does that amount to on $14 billion? Oh, it was like $70-80 million. It was really nothing. So it's interesting, when we were asking questions about that, it was really nothing. And
80 million is nothing, but 9.7 million in brokerage fees is the end of the world.
Absolutely. It's just really kind of, it's all a matter of opinion on what's relative and minute, So anyway, those things get kind of frustrating.
Well, you take heat if you're fighting entrenched interests. And I know that you and a lot of the state financial officers, you didn't really sign up for this fight. It tends to be a person who is into sort of fiduciary steward, balancing the books, right? You were a bank CEO before. That's the kind of person who becomes a treasurer. It's not like no insult intended, but it's not like a really sexy position,
right,
to be a treasurer or controller. And then all of a sudden this ESG thing comes sweeping over, and you find that you have to fight for the interests of your citizens, and you take a lot of heat for that.
Yeah, it's really surprising. You said it so well. I mean, this has generally been a worker bee position. To be a statewide elected position in our state, it's really, you'd think it's just a hard worker bee position, and it kind of typically has been, and now it's become incredibly political. I mean, not even the governor can move the money that the state has in investments. The treasurer is to be overseeing all of that constitutionally, so that becomes an incredibly important place for each state's fiduciary elected officials to be involved in and understand it and look out for the people's money. And but it does have a political cost to it. I mean, I'm having things happen in this office that I never dreamed would involve this office, and it's just beginning to heat up. So we'll strap on our boots and put on our gloves every morning when we come in and get ready to answer the phone and open the mail.
Well, not many people know who their treasurer is, but I really like treasurers who know who their people are.
Absolutely.
And they're not the board of Blackrock. They're the people of Oklahoma. Yeah. Anything you want to say to us before we end the interview, Treasurer Russ? We've covered a lot of stuff, but anything you want to leave off on?
I'd just like to thank you for being involved in this conversation and knowing so much. And wisdom and knowledge doesn't come cheap. It takes time and being in the trenches and devoting research and study. And you've got a significant level of knowledge and understanding, and you're willing to share that across the nation. and help people understand and advise them and help them be aware of that. And I just want to commend you and thank you, because I mean, in some ways you're a mentor and role model to me. I mean, I've asked you dozens of questions when I catch you at an event or something for free. And you know, if you ever tally that tab, I'll check in with you, I guess. But
You just paid it.
yeah,
That meant a lot to
you
me.
know,
Believe me, it really did to hear you say that. Thank you for that.
there's a lot to a servant's role that gets overlooked, and the most intense people out there are doing what they're doing for free.
Hmm. Well, keep up the good work, my friend, and put on those boots. And truth is on your side, and truth will prevail.
Amen.
This has been
Yes.
Treasurer Todd Russ of this great state of Oklahoma. I'm Jerry Bowyer. Thanks for joining us on Meeting of Minds podcast.